Euro dollar. So the euro remains confined to a recent range that's defined between 110.60 above and 107.96 below. A breakback below 107.96 would do a good job of confirming a lower top at 110.60, accelerating declines back towards the December base at 105.20, which guards against the March 2015 multi-year low at 104.60 further down. At this point, only back above 110.60 would open the door for additional corrective upside, potentially exposing 113. But while the market holds below 110.60, there is risk for a lower top and a resumption of the bearish trend here in this market. Sterling dollar. So cable continues to trade lower, with the market confined to a well-defined downtrend, making a series of lower tops and lower lows that has the market now focused on a retest of the 2015 low at 145.66 further down. Look for any rallies from here to be well capped ahead of 150, while ultimately only back above 152.40 would compromise the bearish outlook for cable. Dollar yen. So some steep setbacks in dollar yen on Monday, with the market taking out critical support at 120 to expose a retest of the lows that we saw, those recent range lows going back to mid-October in the 118 area. A break below there would then expose that critical August base at 116.12 further down. At this point, look for rallies to be very well capped, while ultimately only a break back above 123.76 would compromise the newly adopted bearish outlook for dollar yen. Euro Swiss. So Euro Swiss continues to trade within a very tight multi-month range trade, although the recovery outlook remains intact following that break from record lows in early January of 2015. At this point, fresh upside is favored back above the September 2015 peak at 110.50 towards the 115 area further up, while only back below 107.15 would compromise this recovery outlook. Aussie dollar. So Aussie continues to be very well capped into rallies, with the broader downtrend firmly intact and the market focused on a potential retest of the multi-year low from August 2015 just ahead of 69. At this point, only back above 73.85 would compromise this outlook. Dollar CAD. So dollar CAD has been consolidating off recent gains to fresh 11-year highs just over 140, with the market locked within a very constructive structure and favoring additional upside and a continuation of this uptrend beyond 140 and towards the 145 area further up. At this point, look for any setbacks to be very well supported, while ultimately only back below the previous September 2015 peak at 134.57 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So deeper setbacks in Kiwi are now favored, with the market once again stalling out ahead of critical medium-term resistance in the 69 area. At this point, look for these setbacks to extend towards initial support, which comes in the form of the November 18th low around 64.29, with a break below to expose the critical August multi-year base towards 60 further down. SPX 500. So the S&P 500 continues to show signs of a formation of the formation of a major top following the latest rejection off of highs above 2100 at 2117 back in November, which stalled just shy of those record highs from May at 2137. At this point, look for a close below 1993, that recent low that we saw on the 14th of December, to help strengthen this outlook and accelerate declines towards medium-term support in the 1870 area. Gold. So gold continues to show signs of a potential base off those recent multi-year lows that we saw back in December at 1046, though the market will need to establish back above 1100 to strengthen this outlook and take the immediate pressure off the downside. Inability to break above 1100 will keep the focus on the downside, with a break below 1046 to expose that critical psychological barrier at 1000 further down.